Good morning, Paul Georgie from Allendale. It's March 15th, 2012. It's Thursday morning, and the USDA just released the weekly export sales. Soybeans were looking at 650 to 950. We sold a whopping 1.394 million tons, and we also sold 836,000 tons of corn. Trade there was looking for 600 to about 900, so within the range, but wheat numbers a little below the range. They were looking for 400 to 600, came in at 360. So when you look at those numbers, you see why we've seen the strength in soybeans and nearby soybeans here for the last several weeks because of the strong demand and the continued buying for export, and that continues to be the fact that the South American crop, the estimates continue to get lower. Another private analyst yesterday lowered the Brazilian crop to 67 million metric tons. So these are real facts that we have got to be concerned about. The port strike in Argentina appears to be settled for the moment. Talking to people in Argentina saying that this is normal. They'll go on strike for a while, get what they want, and then go back to work for a while, and then another group may strike. So that is a continued process that's going to be worked through. There's a lot of boats to be loaded there, and it's going to take some time to catch up and get their grain moved out of that port. So the strength in the soybeans continue here overnight. We're up anywhere from 11 to 12 cents, and open interest continues to grow. We had open interest in soybeans up another 12,000 contracts yesterday. So a lot of positive, bullish sentiment getting into this market. Also, we've got the USDA prospective plantings report coming out on the 30th. That will certainly have an impact. The belief right now is that we'll have more corn acres, less bean acres, and another reason for the strength in the soybeans. Allendale will be releasing their farmer survey that we did here for the last couple weeks. We'll be releasing that on tomorrow morning at 7:30. And if you want to make sure that you get that information as quickly as possible, make sure you get your email to us or give us a call and give us your email. We'll get that sent out to you as soon as we release the data. The outside markets adjusting from yesterday. The dollar is down a bit. Gold is up a bit here this morning. Crude oil about unchanged as we speak. And that comes off of Europe being quiet. Not much news out of there. Greece is status quo for a bit here. And that is not creating too much excitement. The supply side of the equation in the grains is what's driving the market higher here in the short term. I think we have to be aware the producers here in the U.S. have got to take advantage of these sharp moves that we're seeing in the soybean complex, and even in the new crop corn. We're looking for opportunities there to make some sales. So that is a reason to stay in touch with Allendale's research, and we'll help you work through those decisions. In the livestock futures, markets are higher there as well. We're taking back a lot of the losses that we had yesterday in the cattle and pork complex. However, cash markets are not doing the same. Yesterday we had cutout values in pork were down 60 cents. The product in beef under pressure again. Choice was down 126, Select down 175. Certainly does not help the packer margins, and doesn't give the packers a lot of reason to go out and chase cattle here this week. So they're waiting as long as they possibly can, see if they can get a better purchase here at the feedlot level. The positive thing is we still have tight supplies of fed cattle, and that's giving the feedlots the upper hand at this point in time. So look for continued volatility. Wait for the Allendale release tomorrow morning of the survey numbers of what the farmers expect to plant this year. Nobody knows better than the farmers of what they intend to plant. So stay in touch with Allendale for that reason. And you can call us at 800-262-7538. We wish everybody a very successful trading day, and I will talk to you tomorrow morning. Thank you.